A very special conversation with an upcoming IPO, and it's a name that almost everybody who's watching this would have an association with in more ways than one. I need not speak more about the man on the show today, Nimesh Shah of ICICI Prudential and AMC. Mr. Shah, thank you so much for joining us today. And at the outset, all the very best for the initial public offering. You would have participated in so many anchor books. Your funds invest into so many companies. It's a bit of an interesting moment wherein you are on the other chair now.
Yeah, it was very interesting. You know what happens. So people kept on. So it was a very interesting exercise to be on the other side of the table. Normally, people are approaching you. You are approaching. It was very interesting too because I could go and meet all my peers. Every mutual fund in the country I would have met. Every insurance company I would have met. So it was very interesting to be on the other side of the table. And frankly, our industry is so transparent, and everybody knows everything about the industry as well as of the company, because all our numbers of the month end, everybody knows the numbers. So I used to ask people that we had a conversation for 1 hour. How much more did you get out of the conversation, which you already didn't know, because such a transparent industry.
And the answer was?
And it was an interesting discussion between peers everywhere. So what is happening in the industry, what is my perspective, etc., etc. That's all.
Good. I'm going to make some notes with your permission. But I would like to start off by asking you, and I could have asked you this question in 2022 if you had come out of an IPO, currently, or in 2028. Why should somebody look at investing in a business which is in the mutual fund industry? And what about the timing? At the end of 2025, the industry having done, is the timing right for your IPO?
In an AMC, even 98, when Prudential would have invested. Prudential invested in this company in 1998, and they want to do part divestment after so many years. The company does not need capital, right? This AMC is a brilliant business where you don't need capital to run the business. So the AMC does not need, it is only one of the shareholders who wants to sell. And now why he wants to sell today, or why he should have, I think he waited for 27 years and now he's doing part divestment. And as far as the buyer is concerned, anytime, because I look at this India as an infinite market in every product, not only in every product, it is relatively, when you are in business, it is relatively easier to do business in India because we have got a huge market. Mutual funds, seller and buyer, both I'm saying. Seller, 27 years into this business, he is part encashing his investment that he did 27 years back. From the buyer's point of view, any time I feel is a good time. Because we are such a nascent industry today. Even we are only a 27-year-old, 30-year-old industry, 3 decades of this industry. And there are miles to go, right? Because we are what? We are 1/3 of the banking industry. 10 years back, 11 years back, we were 10% of the banking industry. Today, we are 1/3 of the banking industry. As a country matures, as you move from $2,500 to $3,000 per capita, the person who was investing in traditional instruments starts to getting into investments, right? So that's the inflection point that we are on. So anytime in my this one, because we have got an infinite market ahead, that's how I look at the business. This is my perspective, that any business in India, because you can invest for the long, it is about our execution. So I don't think timing wise 2015 could have been also right, 2020 could have also been right, 2025 can also be right. So from the buyer as well as the seller point of view.
Yeah, I hear you. And you know, an interesting anecdote, Mr. Shah, when the tax rate cuts happen in India, in our office, it's a very young office, by the way. I mean, the average age is probably 70% of what my age is, and let's not get into the numbers. But the limited point is, when we asked people, a dipstick, about what you will do when this tax rate, kahan pe spend karoge, I think nearly 85% of the respondents to which we did the dipstick said that we will increase our SIP or start an SIP depending on where they were.
The young generation, I would say, is quite a smart generation. They are more exposed.
Yeah.
They understand that they have to participate in the growth of the country. And if they have to participate in the growth of the country and they have to beat inflation, they can't be in traditional products and they have to be in investments. I think you guys have done a brilliant job of investor education, where the 26-year-old is well aware. Unfortunately, either he is paying an EMI or doing an SIP, right? It is either of the two. So the smart guys are doing SIP.
Completely agree. Okay, but I would love to know, I mean, so let's assume for a lot of those guys, whether they are 24-year-olds, whether they are 30 or 40, they are samplers of mutual funds or they are investors in mutual funds and SIPs for sure. They may be thinking about why is it a good idea to invest in a stock of a AMC, right? Now, I would love for you to just take a moment, take your time and explain what is it that the blue-blooded investors have told you about why is it that they would be interested? Because I'm sure you've gone to road shows, you've gone global, you've gone local, etc. What is it that the large global and local investors are telling you about their reasons for investing in the mutual fund industry or your IPO or both?
It was a very interesting exercise meeting the global investors and how they look at India, how they look at the financial sector in India, how they look at AMCs in India. With the AMCs, I found them very, very positive. Their whole view on looking at AMCs in the country. They had a very simple take. Every conversation, if I would have done 100 roadshows, 100 people, there was a discussion on SIPs in India. Right? They're amazed by the SIP, this one, and the way Indian market has been steady despite so much outflows during the year. So discussion has always been on SIP and whether the SIP continues. Then they calculate that almost 0.6% of the equity book, more than 0.6% of the equity book is SIP actually, and it is increasing every month. So in their mind, they sometimes, I think what they told me, and a couple of them told me also, that even if there are no sales, new sales happening, the SIP itself can be almost 7% plus of the book, right? So every year, the growth can come only out of SIP will be 7%.
Right.
All of them understand that India has got a nominal growth of around 9 to 11%, whatever you might consider as inflation or whatever. So with a country which is growing at 9 to 11% nominal, and there is a SIP book, and look at what has happened in the last 3-5 years. There is a huge probability that this industry can keep on growing. That is their perspective, that because the equity markets will ultimately follow EPS. EPS will follow the nominal growth of the country. So there is a good chance that they can get a good growth out of the SIP plus the nominal growth of the country, and plus they are getting a business extra. So one of the guys told me that, see, what I am looking at, alpha, I am looking at beta in this country, that I should get the beta of the country plus I should get alpha. He said, if your profitability and AMC's profitability is completely linked also now to the index levels, because the market goes up, my equity AUM goes up, and my profitability goes up, right? That's how it's. So if he's saying, if I have to invest in India, I want beta of the country, I'll invest with you because your profitability grow with the index, right? So your stock price can grow with the index. That's how he looks at it. So you get the beta of the market, and you guys have delivered a reasonable alpha. So I'll get beta, I'll get alpha, plus I'll get business. So these are two different ways of that what I heard from foreigners about this industry. That how they look at this industry. It was very interesting. I never looked at my business that way.
It is. So there's a bit of a natural growth that comes in independent of what extra that an AMC can do or what extra investors do when it comes to the SIP.
Yeah, but when you compare it with mutual funds, for the common investor, I would always say that mutual fund should be first, because individual stock will have its own risk.
Right.
While mutual fund puts in 40, 50 stocks at the same time, so you are diversified. You are not in a single stock risk. So if you think you want to participate in the growth of the country, then maybe mutual fund is a much better diversified instrument than investing in a single stock.
Most certainly. Okay. Could the base effect, though, Mr. Shah, impact the kind of growth that you do? So the last 6, 7 years, 8 years, I was looking at some of the numbers and the kind of profitability growth that has happened for you, for others, etc. It's quite stunning. But it was at a lower base. Now the base has gone up a bit in 2025. Can the growth rates be different of the next 5 years, next 10 years because of the base being higher now?
You see the base being higher, I feel the base is too low, right? Because again, I'm saying we are blessed to be in a country like India, which is an infinite market. The traditional instruments are getting converted into investments. In fact, the momentum is gathering, right? If you go to earlier small town, India was not investing in India. With whatever SEBI has done, small town, see, a lot of things has fallen in place. If you see the last 5, 6 years, why suddenly from, say, in 2017, 18, we were celebrating 1 crore customers. Today, we are celebrating 5.5 crores customers plus as a mutual fund industry.
Right.
A lot of things has fallen in place. First, SEBI, I think I give full credit to Security and Exchange Board of India. where they have created a product. The risk management in this product is so brilliant. The product is very good for the final investor. The risk management is it's a transparent product.
Sure.
We charge low. The lower we charge, the better for the customer. So it's a good industry where the product is good for, you can have a debate with whether our margins are enough or not enough, that can be, but there is no debate that this is one of the best products in the financial services for the common man, and that complete credit to the regulator that he has ensured that all our products are good for the final investor. So point one, the product is good. The past experience of the customer in this product has been good. Right?
Yes.
The digital availability of the product, the way the guidelines are, you can, from a small town in India, you can directly buy the product, right? So it is the digital availability. So the market in my mind is infinite, right? It is still infinite. I think it is just the beginning, right? We have only laid the foundation. I think in 27 years, we have only laid the foundation. The superstructure can still come up.
So right? the growth rate for the industry and for you as well, I'm presuming, I don't know how much you can talk about your growth rates currently under the guidelines, but the growth rates for the industry, you reckon the next 10 years could actually mirror or be better than what the past
I won't
years
go
have been?
into the exact numbers and all. I'm saying the potential for India has just started in this industry. That's what my feel is. I believe the market is infinite. It all depends on how we execute going forward.
Got it.
So I'm not getting into the growth rates and all. I can't be talking about those.
Sure.
But I feel I'm very positive overall. The amount of awareness that investors have. So 1 crore investors have become 5.5 crore investors.
Yeah,
They are not with big money who have come in. It's a very common man who has come in.
Sure.
But as this young fellow who has come into in the last 5 years, as he grows in wealth, say a 27-year-old has come into the into mutual funds today and given a token amount today, I think his wealth will grow over a period of time. And with his wealth growing, the AUM of ours also can grow because of prosperity happening to my investors.
Got it.
Right? That is what has happened with all of us. What we were investing in our 20s and what we were investing today is very different. Right? So the same thing, the amounts increase over a period of time. So earlier, say 5 million people had invested and their AUMs were growing.
Right.
Today, 5.5 crore people have invested and their wealth will grow. And with that, the AMC industry can grow.
Okay, fair call. Are you different? I mean, so this is for the industry at large, right? Are you as a house, as a shop, how are you different from any of your peers that exist out there?
One thing at the cost of bragging in the past, if you see, we have managed growth well, right? We have grown in the last so many years, right? We have been continuously growing. You know our growth numbers. If you see the past numbers, the growth numbers have been very good.
Yeah.
But with our growth, our investors have got a very good deal, right? Because if you look at the fund performance of the last 3 years, 5 years, 7 years, 20 years, right? 20 years, 15 years, 10 years, 5 years, most of our investors would be satisfied, right? So this business grows only on satisfied customer. If the customer has made returns, he'll invest again with you, otherwise he'll not invest with you. We have got a very transparent product which anybody can understand. The regulations are too simple and people can understand what they are seeing. So if your past growth is there, if he sees his statement where he has made money, he'll come in. Otherwise, he'll not come in. That's as simple as that. So I feel in that background, one thing, past experience of customers have been good. We have got 1.5 crore customers and their experience has been good with us. And second thing, what we have done, we don't have what we have specifically since last 10, 11 years you would have seen, we have got different styles of fund management within the company.
Okay.
And they are very distinct from each other. Styles of fund management, I'll just explain. There are different ways you can make money out of the market.
Yes.
Right? Somebody would have a value style, right? That he will look at only at relatively cheaper stocks. So there are different products managed by different fund managers, and all of them have got a very different way of managing money. So one person may have a value style, a contrast style, and a concentrated style, right? So that person will manage the money in that way. There is another person who's only a growth person. Third person who's only a quality person. So the AUM of 6.5 lakh crores of equity is been managed in very different ways. In different cycles of the market, different styles work. It is not that in the long term, our endeavor is that all funds should do well, right? But in the short term, different market environments, different styles can work. So some years, one style of fund management can work, another years, another style of fund management can work. Different styles can work in different years, right? Different macro environment. Like I'll say between 2016 and 20, value as a style didn't work in the markets.
Right.
Right?
Yeah.
So part of ICICI Prudential AMC didn't do that well. But come 2021-22, as the recovery post-COVID happened, the market got diversified. The products which didn't do well between 2017 and 20 did well in 21-22.
But even when the products were not doing well, there were other parts which were doing well. So you
exactly.
kind of
so it was a diversified. So we have diversified and we have managed growth well.
Okay.
In AMC, it is very important that as you grow, you change your processes in a way that managing a 2,000 crore fund and managing a 20,000 crore fund and managing a 50,000 crore fund is very different from each other. Your thought process don't have to change. You have to change as a person to manage those funds, right? And those switches are not important. I think we have navigated in the past, we have navigated those switches well.
And therefore, that sets you apart, and you believe that as the size grows, you will have this strategy in place for you to be able to give good returns to customers so that you retain the customer.
We are continuous, and we have the advantage of learning from the West, right? They have made their mistakes. How, say, American AMCs have managed growth well, right? We have to continuously learn from the West because they have made those mistakes in the past. We don't have to repeat the same mistakes.
Right.
We can learn from those mistakes that people would have made in the Western world because we are a relatively younger industry than them and learn from them.
Most certainly, most certainly. When I try to think of what is it that, I mean, I was looking at the numbers and largely on a lot of parameters, I mean, on a few parameters, a lot of AMCs will be very different. But in a lot of key parameters, the averages almost mirror what the players are doing in and around. So on return on capital employed, on EBITDA margins, etc. Very strong numbers. Do you reckon that for you as well, this northwards of 70% on the operational metrics, ROCs northwards of 20-25%, you think all of these can continue as you grow in size?
While I would not comment on what happens on the numbers in the future, I would say in the past or in the near past, which we can talk only about the last 3 years, the growth numbers are very good. And in this business, ROIs, return on investment is not, this is a business of you have invested your brand. You have invested, your brand is at stake. So it is not serious investments. You don't have to invest money in this business. So ROI will always be very high, right? Because you don't have to invest capital. You are investing your intellectual capabilities in managing money, right? So ROIs in this business are always very high, right? You don't, for further growth, I don't need that much capital to grow. So right now also we are, as a company is not getting any equity. It is the selling shareholders, Prudential, who has been a 49% shareholder. It was a 51-49 joint venture between ICICI and Prudential.
Got it. And you foresee that the business that you are in is very difficult to foresee very large equity dilutions over a period of time.
We don't need capital, but Security and Exchange Boards of India's rules are that if you are putting in 10% as an IPO, you have to have 25% in the market over a period of time.
Right.
So whatever are the regulations of SEBI, that will be followed, and Prudential will have to divest that money.
Yeah, but which is divestment and which is not equity dilution per se. I mean,
we won't need capital. We don't need
which is such a, I mean, people, ideally people should love such industries which don't need capital to grow, right? It's just a self-fulfilling prophecy. Okay, 2 or 3 other questions. The growth quality, Mr. Shah, for a large AMC versus a small AMC, we've spoken about that. The other small thing that is happening in the growth, large versus small AMC, is that a lot of smart money managers, new houses are getting permissions to launch asset management firms. Competition in that sense is really heating up. Could that impact ability to attract capital as well as manage capital profitably?
I think the new AMCs that are coming up, it is a very healthy trend. I think the number of AMCs can grow further from here also. It is good. More the people are there. If you see last 10 years also, my market share has not dropped because so many AMCs have come into the country. My market share is only creeping up. Right, so
what would your market shares be? Just trying to understand.
I'll say I'll only talk about the equity because the equity market share, that is retail in nature. So today in the mutual fund space, my equity market share would be around 13.5%. So it has been steadily going up. So in fact, the new guys will come up with new ideas. They'll grow the market. I feel awareness. They create more awareness. There are 30 of us today. There are 50 of us. The 50, all 20 want to become big. These people also would create more awareness in the market. So it is good. They'll come up with more innovative products. So we will also not become complacent. we will also be running. So we'll also be running, they will also be running. And India is an infinite market. Again, I'm saying, we have got only 5 crore investors in a 140 crore population. Today, we have got only 5 crore investors. There are 11.5 crores people who have invested directly into stocks in this country. There are 11.5 demat PAN numbers. I'm talking at PAN number level. So if there are 11.5 crore people who have directly invested in stock, mutual funds, more people should have bought, and then the people who have bought direct stock. So we have got miles to go. So more AMCs are coming in. It's a very positive thing.
Okay, very interesting. So therefore, you do not foresee any kind of an impact because of higher competition. If anything, it will grow the industry.
Competition is good. It is healthy.
It is healthy.
New people will come with new ideas. So it's good. The industry will grow.
Okay. Very interesting to note that. Any pushback that you got from any of the investors about either the industry or your IPO, etc. Would love to know if there is anything that worries large institutional investors about investing in the AMC industry in India.
No, in this business only you have to see that with the growth that is happening in the market, you are able to give good performance or not. Again, I'm repeating the same thing. SEBI has created an industry whereby if you perform well, if your schemes perform well, then only you can grow, right? If my schemes don't do well, if they are not good for the investor, if I don't beat benchmarks, then I will not grow. Whether it is a small AMC, big AMC, medium AMC, our dharma is to beat benchmark. If we don't beat benchmark, right, we should not be growing also. We are not good for the investor then, right? So the whole thing is, the risk in this business is always that we have to keep performing. Right? If we don't perform, we should not, and ideally we should not grow also. Why should you are not doing you're not giving any service to the investor. They can as well buy the passives. Then what is the role of active fund manager?
Got it. Okay, well noted. Last two questions. One, because this conversation almost seemed of talking only to mutual fund house, but you are not just into mutual funds. Your business, which is what the investor will be investing in, is not just mutual funds, right? Tell us a bit about that.
So mutual fund is one of our business. It is the major chunk of the bottom line because we started it 27 years back, and it is doing well. It is when we run a mutual fund, we should be conscious that retired school teacher in Guwahati, I define it as that retired school teacher in Guwahati or Kottayam or Ludhiana is my customer. And if he remains with me, so risk management, if he remains with me for 5-7 years, then he should make a good return and go. That is the mindset when we are. So the risk management is very, very strict in the mutual fund part of the business. Suppose somebody wants to run concentrated funds, right? Instead of investing in 50 stocks, some HNI, high net worth individual, may want a concentrated portfolio. Or he wants to invest in mid-cap, small caps, even though we would have closed down our mid-cap, small cap fund. Right? We have closed down since 1.5 years, we have closed down our mid-cap, small cap. So then we prefer to do it in our alternates business, which is the PMS, where there are AIFs. So where an HNI who understands the market can come in, and that is the business that has grown well for us, right? Where HNI is fully informed as to what is the concentrated risk that he is taking and what he can, he knows, people in the know are investing. Right, so that is a way comforting for us also. Then he knows that mid cap is high risk, high return. So after knowing that, he's investing in it. We are also into commercial real estate as an AIF, right? So that is also good business for us. So it is an alternate business, what I'm talking about. There is a mutual fund business, there is an alternate business. I've got my ETF business also, which makes lesser profits, but there is a ETF business. And the fourth, we are planning, we have applied to SEBI. We are planning to, if the permissions come in, then we would like to get into private equity also.
Okay. Fair call. Mr. Shah, last point, and that is more a leadership lesson that people would love to know, right? Because they are investing in the company, they're investing in the leadership team of ICICI Prudential AMC as well, right? How have you evolved as a leader as you've grown this business from what it was, which was also not a small size, to this very large size? And what is it that you look forward to in the future?
See, we have created a very competent team over the years. If you see and people have stayed for a long period of time. And at some point of time, there are many leaders in the industry who are also ex-ICICI Prudential. We are very happy for them also. So we have got brand ambassadors outside also. And we have got good people who are working with us since a long time also. I think it is a great privilege. I myself believe, I've been 32 years with the same brand. I have joined ICICI as a trainee. I'm still in ICICI. So I believe this gives a very professional setup. I don't have any single share owner. It is a diversified company. We have professionals reporting into professionals. There is a professional board. So we have given a good environment to people to prosper. And people have done well staying within the company for a long period of time. And if you give the credit where it is due, my single thing is that have very smart people working for you. People can be smarter than you yourself. I encourage my one-downs also to recruit people who are smarter than them, right? If that model is established, and then the person, when you get a good person to work for you, the company's ability to identify talent, and then ability to retain and groom and grow that talent. If he is getting his space in the sun, let him get his space in the sun, and the mutual insecurities should not be there within the company. If you create that kind of positive vibes within the company, everybody should enjoy. I enjoy coming to office on a Monday morning.
Yeah.
Monday morning is very enjoyable that I'm coming to office. It has been there for me for last 32 years. So we always endeavor that environment should go to everybody in the company.
Well, made last, made prosper, made do even better than what it has done thus far. All the best for the IPO, Mr. Shah, and thank you so much for speaking to us from our studios.
Thank you.
All right, and viewers, thanks for tuning in this very special conversation.